All right, sir. How about we start the presentation now?
Okay, wait.
Okay.
بس في صوت دير بالك في صوت دير بالك السلام عليكم.
Waalaikumsalam warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
Waalaikumsalam. But sorry, sir. I will open this event first.
Okay, inshallah.
Okay.
كان
Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
Good afternoon, everyone. This is a general lecture session with our speaker, Dr. Mander Eldaya. If everyone is ready to start, I will open this session. Before we start, I would like to remind you to open your camera and mute your audio. Also, I would like to inform you that you should rename your name to your full name since it will be used in the certificate. The Honorable Dr. Mander Eldaya as the lecturer for today's event. Ms. Fitri Wahyuni, SAMSC, as the head of International Program of Accounting. Alhamdulillahirabbil alamin wa bihi wassalatu wassalamu ala asyrafil anbiya'i wal mursalin wa ala alihi wa sahbihi ajma'in. Amma ba'du. Praise to the presence of God Almighty who still gives his guidance and mercy to all of us, so that we can attend this general lecture in a good health. Blessings and greetings let us always devote to our Lord, the Prophet Muhammad, who had brought us from the time of Jahiliyah heading into the era that is full of inayah. The topic of today's general lecture is the type and cost objectives, which will be delivered by our special speaker, Dr. Mander Eldaya. Let me introduce myself. My name is Rahmi Nur Aziza, as the Master of Ceremony. Here I would like to show you the agendas we have arranged today. The first agenda is opening. The second agenda is general lecture session. The third agenda is question and answer session. The next agenda is photo session, and the last agenda is closing. Let us start the first agenda, that is opening, by reciting Basmalah together. Bismillahirrahmanirrahim. The next agenda is general lecture session in the subject of cost accounting with the topic, the type and cost objectives, and will be delivered by Dr. Mander Eldaya. For Dr. Mander, time is yours.
بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على أشرف المرسلين سيدنا محمد صلى الله عليه وسلم وبعد. First of all, I want to thank Muhammadiyah Yogyakarta University IPAC students for this opportunity to share our knowledge or experience to the students in Indonesia. Inshallah, today we'll discuss about the type and cost objectives. This is very important topic in cost accounting. Our lecture will be, inshallah, in our agenda will be introduction, second cost terminology, third cost classification, cost type of cost accounting, business sectors, and cost objectives. The main objective of cost accounting are ascertained of cost. Ascertained of cost, that means if we need to measure or determine any cost objectives, we must know the cost itself. The cost, like fixation of selling price, proper recording, and presentation of cost data to management for measuring efficiency and cost control. That means when we know the cost of cost object, that help our management to take decision. Take decision is very important stage or step in the management. So when we know the cost of any items or sectors or department, that help the management to take decision. Our voice is clear?
Yes.
Yes,
Yes.
sir.
It's
Okay.
very clear.
Okay. So the cost accounting is a process or accounting process that measure all of the costs associated with products or service. The cost will be include both fixed cost and variable cost. So the purpose of cost accounting is to assist the management in decision making, as we know. How we will assist or the management or decision making, how we will know the cost, that what we will know in this lecture. Okay. When we talk about the cost, what is the cost itself? The cost is a resource sacrificed or forgotten to achieve a specific objective. A cost such as cost of labor or advertising. When we use any resource to take the benefits from this resource, that means cost. Like when we buy the material to product the table, when we buy the wood to produce the table, we will buy the wood. The sacrifice, the money we pay for buying the food, this is the cost. So we sacrificed the money to use or to benefit from this food. When we buy when we pay the payroll or pay the salary for the labor, that means we pay salary for this labor to use his experience. That means we sacrifice money to use or benefit from the this stuff or this labor. That means the cost. So summarize, the cost is the resources we sacrificed or forgotten to achieve a specific objective. A specific objective, the use of this staff or labor, the use of the material we buy to use or to manufacturing products. We can divide the cost for actual cost and budget cost. The actual cost is the cost incurred that is historical or past cost. When we buy the material and pay the money, that means this actual cost, this historical cost. When we talk about budget cost, that is a predicted or forecasted cost. That means we will pay the cost in the future. The budget cost, that when we make or create a budget for the future, for next year or after next year, we can estimate or predict the cost. This is the budget cost. What we mean about cost objects? Cost objects is any item or activity for which costs are being separately measured. This is any item or activity which costs are being separately measured. That means the most common cost object are companies' output, production, or service. The cost object, when we need to know the cost of this car, that means the car is cost object. When we need to know the cost of this jacket, that means the cost object is the jacket. When we know the cost of the consultant service for audit or lawyer, that means the cost object is the cost of jacket. That means cost objects is any item or activities, can be tangible or intangible cost objects. Cost units, that means the cost incurred by company to produce, store, and sell just one unit. Cost unit, that means one unit of particular product. Example, if we have total cost of any item or cost object, like table, like maybe machine, like cars, that means if we have total cost $5,000 US, we can produce 1,000 units. That means we have total cost 5,000 for 1,000 units. We need to know the cost unit. We can divide it, $5,000 divided by 1,000 unit product equal $5 per unit. This means the cost unit or cost per unit for this product is $5 per unit. Third, cost centers. Cost center, that means a part of an organization. It is location, person, or item of equipment for which cost can be ascertained and used for the purpose of cost control, like marketing department or customer service department or help desk service department. This is cost center. That means maybe we need to know the total cost of one department, advertising department, marketing department. That means cost center. Okay, we can open the discussion for students, or after finish the class or lecture, we can open the discussion system. Hello?
Sorry, sir.
Yeah, we can open the discussion, or if any student have any question, or after finish the class, the lecture, we can open the discussion.
After finish the class, we have
Okay,
question
okay,
and answer session.
Okay. So we will talk about cost classification. Cost classification, that means we can classify the type of costs based on nature, based on behavior cost, based on function cost, and based on the element of the cost. First classification is divided by the nature of the cost. The nature of the cost, maybe the cost is direct cost or indirect cost. We can distinguish between the direct cost and indirect cost. Direct costs are related to the particular cost object and can be traced to it in an economically feasible way. Any cost, we can allocate it, or we can trace to the specific cost object. We can know this is the direct cost. For example, the cost of steel or tires is a direct cost of BMW. Okay. What we can understand from this example, if we need to know the cost of steel or tires in this car, we can know the cost easily or feasible way, or in an economically feasible way, we can know the cost of this tire. If we need to know the cost of wood in the table or in chair or in furniture, we can directly know the cost of this material. Okay, if we need to know the cost of salary for the labor who manufacture the product, we can know the salary in visible way or in easy way. We can just calculate the payment for this stuff or this labor. Okay, so this is we can call it direct cost. So the direct cost, we can divide it into 3 types of direct cost. As we know, we can know this is direct material cost. The wood used in the manufacturing chair or furniture is direct material cost. Okay, the payment or the salary that can be pay for the labor stuff in manufacturing, this is direct labor. The direct overhead cost, we can use the fuel or the petrol that can use in the machine for the production is overhead cost, or the rent for the manufacturing or for the store is the direct cost. So we can need to know also cost tracing. Cost tracing is used to describe the assignment of direct cost to particular cost object. So we need to know this term for direct cost is cost tracing. Cost tracing, that means we can assign the direct cost to the particular object. So we can summarize this idea. The direct cost is any cost related to the particular cost object that may be direct material, like the wood for the manufacturing table, direct labor for the payment or salary for the staff, or direct over cost. This is the direct cost. Yeah. Next, indirect cost. Indirect cost, that is of a cost object, are related to the particular cost object but cannot be traced. This is the difference. The direct cost we can trace, but in the indirect cost we cannot be traced, or we can difficulty to trace, not easy to trace to it in economically feasible way. Also, we can know that maybe cannot trace in economically feasible way. For example, the salaries of a plant administrator or lease cost for Spartanburg plant. That means if we have staff in administrator or in administration or in management staff, the management staff serve all company, not serve the manufacturing department. So we have salary in administration or in management. We cannot, or it is not easy to trace the management or the manager in the company, his salary to direct to the production, or also the electricity of administrative. It is not easy to particular products in the company. So the indirect cost, like this is example, the salary of plant administrator or electricity of administration. This is also not easy to trace to the cost object. We have 3 types of indirect cost, like indirect material, also indirect labor, and indirect cost overhead cost object. So indirect, we can use cost allocation term. Cost allocation is used to describe the assignment of indirect cost to particular cost object. Cost allocation, that means we cannot directly know the cost of this product or this item, particularly in the cost object. So this is what we know the indirect cost. We can divide it, the cost divided by behavior, the behavior of the cost. We have 4 types of cost: fixed cost, variable cost, semi-variable cost, and step cost. The first is fixed cost. What we mean about the fixed cost? Fixed costs are the costs that are not affected by change in a quantity of output. The fixed cost, if we produce 1 unit, the same in total. If we produce 1,000 units, the same in total. If we produce 5,000 units, is the same as in total. As activity levels increase, fixed costs stay the same. For example, of this include payment of rent or lease machine. If we pay rent for the store, our company, if we put in the store 1 unit or 10 unit or 1,000 unit, is the same rent or lease machine. Lease machine, if we produce in this machine 1 unit, 10 unit, 1,000 unit, the lease of machine is same, not a change. As we know in this chart, you can focus here. The total cost is x-axis. Okay, this fixed cost is the same. This is the number of units. If we produce 1 unit, 0 unit, 10 unit, the total cost is the same. You see here, total cost is the same. Okay, we have example here. We have a practical example. Okay, the total cost, the annual total fixed cost, supervision cost for BMW X assembly line. Okay, if we, the number of X produce, if we produce 10,000, total cost is 2 million. Okay, if we produce 25,000, the total cost is 2,000, the same. Yeah, if we produce 50,000, the total cost is same. But what is the change? What is the change here? The change is the fixed supervision cost per X6. That means per unit. If we produce 10,000, that means if we divided the total cost here, if we divided total cost by or divided by the products of units, the 1 unit or per unit cost per unit is changed. If we change 10,000, the per cost per unit is $200. If we produce 25,000, the total the per cost per unit is 800. If we produce 50,000 unit, the per cost unit is $40. That's the term of cost or fixed cost. So in the total, fixed cost in the total is no change, is stay the same, but is the cost per unit is a change advisor. When we increase the product, the cost per unit will decrease. The cost per unit will decrease. Next, variable cost. Variable cost are costs that directly related to the change in quantity of output. That means the variable cost, the total variable cost, is a change when the output change. The total variable cost is a change in a quantity of output. As activity levels increase, variable cost increase in proportion to them. That means when the total production, when the production is increased, the total variable cost will increase in proportion. As we know in this chart, this is the total cost and this is the number of units produced. If we no produce any unit, the total cost or variable cost is 0. But when we increase the production, this is the production, when we increase the production, the total cost will increase, as we see in this chart. If we no production, the total variable cost is 0. If we see in this table, this column is the number of XX produced. Okay, if we produce 1 unit, the variable cost per unit is $600. Okay, what is the total variable cost? Is also 600. We can multiply there. We can multiply 1 by 600 is 600. Okay, next. If we produce 1,000, the cost per unit is same, no change. The variable cost per unit, this is different between per unit and total. Okay, you can mention or you can know the cost per unit is variable cost per unit is same, no change, but is the total variable cost is a change. When we multiply 1,000 by 600 is 600,000. Okay, next, if we produce 3,000, also cost per unit is same, no change, so 600 is US dollar. Okay, the total variable cost is $1,800,000. So what we note here, the cost per unit in variable cost is same, no change. That means if we produce the meal of Kentucky, the cost of the meat in this meal is same. So if we produce 1 unit, same. If we produce 1,000, same. So the cost per unit is same, no change. But the total variable cost is a change. When the level of production is increased, the total variable cost is increased. As example, expenses of the purchase of raw material and payment wages are example of variable cost. Okay. Next, semi-variable cost. Semi-variable cost. That means are costs that have both fixed cost element and variable cost element. For example, telephone bill. For example, telephone bill or electricity bill or repairs and maintenance. That means if we have telephone bill, we have fixed cost monthly, like maybe 100 rupiah Indonesian. Okay, if we also, this is constant every month. If you know use the telephone or not use the telephone is constant, but when you use your phone is more than the limit of maybe 50 unit like this, we can pay more. Like electricity, we have constant electricity bill. You can pay the same payment, but if you use the electricity more than you will pay more cost. Like this, we have some of fixed cost, but after that you will use variable cost. Next, stepped cost. Stepped cost are the costs that are fixed up to certain level of activity. Once the activity level is reached, there is an additional cost again, fixed up to the certain level activity, so forth. For example, supervisor cost. If we have one supervisor, follow or supervise maybe a 20 labor, a 20 staff, you can supervise this 20 staff. If the company is used like 40 staff or 40 employees, you will use another supervisor for this staff. So the first staff or supervisor cost is fixed cost. When you increase the level of the number of staff, you will employ another staff. So you will pay another cost like this, as we see here. This is the total cost. When you increase the level, you will increase the cost. Okay. Another term we need to know in the cost accounting is the relevant range. Relevant range. What we mean about the relevant range? Sorry. Is it the band or range of normal activity level or volume in which there is a specific relationship between the level of activity or volume and the cost of question? In another meeting, in relevant range, where total fixed cost remain constant and variable cost per unit remain constant. That means the meaning of fixed cost and variable cost is correct. As we see in this chart, you can notice here in this chart, this is the relevant range 1, this is the relevant range 2. What we mean about this? If we rent store or store for merchandise or for inventory, if we rent a store for inventory, this store, we can save in this store maybe 5,000 units. We rent land or store, we can use this store to save 5,000 units. Okay, we can pay maybe $100 for 1 year. Okay, but if we need to store maybe 7,000 units, we need to rent another store. So the relevant range for this store is just 100 units. If we need to save another store, we need to pay another cost. We need to know another cost. That means we go to the another relevant range. The first store we pay is fixed cost and variable cost for this rent store within the relevant range, as we know, as we see here, 100,000. If we need to know to rent another store, so we'll pay another cost, or we go to the another relevant cost, so we need to pay another cost. That means the relevant range. Relevant range, the cost that can be is correct within the number of output or the number of product or the number of unit. If we increase the level, so we need to go to the another relevant range. We can divide it another type of cost accounting divided in the function. The function, we have two type of cost, a production cost and non-production cost. Production cost and non-production cost. The production cost, that means the cost we can incur to produce the product or to provide the service, is divided to direct material, direct labor, and direct over cost. Non-production cost, that cost we incurred to sell, to advertise, to manage the company. This is not related to the production. This is, we can call it is administrative cost. Administrative cost. Some books is call it administrative cost. Administrative cost is include four type of cost: admin cost, selling cost, distribution cost, and finance cost. These four type we can see as admin cost. The admin cost is include the cost in the administration or in the management of company, like electricity of headquarter, the salary of headquarter, the merchandise of the stationery of headquarter, the rent of headquarter office. This is admin cost. Selling cost, that related to the advertising cost, the cost we incurred to sell the product, advertising cost, marketing cost, payment for stuff in the admin cost, in the marketing cost. Also distribution cost. Distribution cost, that related to the transfer our product or our service from our company to the client. When we sell the product, maybe sometime we incur some cost to transfer to the product to the customer, like maybe transportation cost. The finance cost is related to the finance our company. Maybe if we take loan from bank, we pay the interest of loan. We if we have loan, also maybe can make feasibility study to take the fund or finance from the bank. This is non-production cost or admin cost. The types of cost is depends on the element. We have three type of cost. Material cost, that all costs of materials purchased. When we produce the car, we buy the material of meal, of tires, of wheel, of motors, and plastic. All this is material cost. Labor cost is all staff costs related to employees on the payroll of the organization. Labor cost for merchandise, labor cost for stuff in manufacturing or in factory, labor cost for the admin cost, for staff, for the marketing staff, selling staff. This is labor cost. Overhead cost, this is all other costs incurred by the organization which are not material or labor, not material or labor, like maybe rent cost, finance cost, maybe maintenance cost, telephone bill cost, electricity cost. This is all material, even not material or not labor cost. Okay, we will go to the business sectors in the marketing. What is the business sectors? Business sectors, we have three business sectors. We have three business sectors. Manufacturing sectors companies. manufacturing sector companies, that companies purchase material and components and cover them into various finished goods. In manufacturing sectors, examples are automotive companies such as Jaguar, Nokia, and computer companies such as Toshiba. These manufacturing companies is purchase or buy the material or raw material and convert this item to the finished goods. For example, automotive companies like Jaguar, they buy metal, they buy leather, they buy tires, they buy motor, they buy all these material and convert, manufacture this material to finished goods as car. The finished goods is car. Nokia or Samsung or Huawei, like this, we can buy the material, plastic, chips, battery, glass. They buy this material and manufacture or convert this material to mobile. Computer companies, they can buy keyboard, mouse, screen, blah, blah, blah. And after that, they can transfer or convert this material to computers. Okay, next, merchandising sector companies. Merchandising sector companies purchase and then sell tangible products without it change their basic form. They buy the finished goods, just tangible products. They can buy these tangible products and sell as same, no make any change in the basic form. Like bookstores such Barnes and Noble, supplier of hospital products, this can buy the finished goods from the production or from manufacturing companies and sell it. Just buy and sell finished goods, but tangible products. This is manufacturing sector. Okay, last one, service sector company. Service sector companies provide service in tangible products. They provide service in tangible products. For example, legal advice or audits to their customers. Example are law firms, Watchell, Lipton, Rosens, accounting firms such as Anderson, Ernst & Young, banks such Berkeley. So this is service sector, just to provide service, intangible products, consultant or audit or any service, but it is intangible products. These three type or business sectors: manufacturing sectors, merchandise sector, and service sector. Okay. Types of inventory. Types in inventory is special for merchandise or for manufacturing sector. This is types of inventory is related to manufacturing sectors. The first of inventory is direct material inventory. Direct material inventory. Direct materials is in stock that will be used in the manufacturing process. That will be used in the manufacturing process. That is, we can call it raw material. Raw material. For example, computer chips and components need to manufacturing cellular phone. The raw material in computer chips or a glass or a battery, this is, we call it raw material or direct material. like in producing cars. That means the raw material of metal or leather or wool or steering. This is raw material. This is in the store. This is in the store. Still no make any manufacturing in this material. The second type of inventory is work in process inventory. Work in process. Work in process. This goods partially worked on but not yet completed. We start to manufacture but will not make as finished goods. This is in process. So, for example, cellular phones at various stage of completion in the manufacturing process. This is also called work in process, work in progress, work in progress. For example, if we make the table, sometime we can cut the wood, paint the wood, but still not make the table itself or finished goods. This cutting wood and paint the wood we can call work in progress. Work in progress. If we make computer, we can buy the chip, we can buy keyboard, we can buy screen, but still a process not finished the computers to be sell in the market. Last type of inventory is finished goods. Finished goods inventory. That means finished goods. Goods, for example, cellular phone completed but not yet sold. That means finished goods. That means if we produce the car, we produce the car, all parts of the car we can turn on and drive, but is not buy. This is in the store. This is in the stock. Okay, this is finished goods. So we have three types of inventory: direct material inventory, work in process inventory, and finished good inventory. We have two types of cost: prime cost and convention cost. What is the difference between prime cost and convention cost? The prime cost are all direct manufacturing costs. All direct manufacturing costs. For cellular products, prime cost is equal direct material cost and direct manufacturing labor cost and direct manufacturing labor cost. So the direct cost or prime cost, this is just continue or contain, involve just direct material cost and direct manufacturing labor cost. This is the prime cost of any products, If we need to know the prime cost, that means direct cost material and direct manufacturing labor cost. This is we call is prime cost. Convention cost, from its name is known, are all manufacturing costs other than direct material cost. So convention cost is represent all manufacturing costs incurred to convert direct materials into finished goods. So the conventional cost is to convert or transfer the direct materials into finished goods. How we can convert this direct material to the finished goods is from direct manufacturing labor and manufacturing overhead cost. This contains two types of cost: direct manufacturing labor cost and manufacturing overhead cost. So if we have direct material and labor, okay, this is the prime cost. But when we use manufacturing overhead, that means we change or convert the direct material to finished goods. So if we need to know the convention cost, we can calculate direct manufacturing labor plus manufacturing overhead cost. We can know the convention cost. So if your lecture asks you to calculate the prime cost, just we need to calculate direct material cost plus direct manufacturing labor. If we need to know the convention cost, that we need to know the direct material, the direct labor cost plus manufacturing overhead cost. Okay. Last part of this lecture is the cost objectives. Why we need to know the cost of any cost object or any product or any service? Why we need to know the cost of these products? Okay, cost objectives, this is guidelines for management. As we know, as we say at the first of this lecture, the cost product or the cost course or determine the cost or allocation the cost. This is to help management in decision making. This is main objectives. Main objectives from the cost course is to help in decision making. So the cost of objectives is guidelines for management. Costing is faithful servant of managers, which organization it aids managerial decision making for all particular points of a view. If we are in the management level, if we need to take the decision to buy or sell, to make a plan or budget, we need to know the cost to take this decision. So the first or main objectives, this is the guidelines for management. Okay. Second objectives is cost allocation. Cost allocation. The primary purpose of cost accounting is to allocate all expenses incurred to the respective products and be careful the cost individually as and for income. So cost allocation, that means we need to know the cost of this product, the cost of this computers, the cost of this car, the cost of this service, the cost of this consultant, the cost of this furniture. So the objective of cost is cost allocation, to know how much this cost of this product. So cost allocation. Per unit cost of different types of product. If we have maybe 10,000, 10,100, 1 million is products, this is a total cost, but we need to know the cost per unit of this product. So various entities produce many types of production within a factory. So in some factory, we have maybe Toshiba a computer, we have laptop, we have also a desktop, we have a laptop, the screen is 25-inch or 16-inch or 20-inch. We have different type or different size of products. We need to know the per unit cost for each type of products. So then by correctly analyze the cost of for the respective products, we need to know the products of every unit in our factory or in our inventory. Fourth one, to examine the cost. To examine the cost. Sometimes the management want to decide whether to produce the product in hours or out outsource the same. So we examine the cost in the management. We need to know if we produce this product inside our factory, or we can decide to buy it's a product from outside. So we need to know the cost of this product. Like maybe we need to know if we produce this computer, how much the cost of manufacturing this computer inside the factory, maybe 1,000 US dollar. Okay, if we buy this laptop from outside, maybe the cost of buying this laptop maybe 1,000 US dollar. So is the best of our company to buy itself from outside. This is to examine the cost. Maybe if we produce this computer inside, it's costly more than if I buy from outside. For making such a decision, management has to re-examine the cost associated with the production of produce in house. So you will know in the future what is the decision making mean. Decision making mean we need to know the cost to decide it. Some decision making about we buy or purchase, we buy or manufacturing, buy from outside or manufacturing inside. So to examine the cost. Okay. For fixation of appropriate per unit of the produce. By correct allocation all the expenses incurred, one can easily judge the cost of producing or manufacturing the product and the number of units to produce. It serves a useful purpose of the management for deciding the per unit sell price of produce. So when we know the cost of this product, we can decide it how much will sell this product. So the sales price, we can decide it the fixation of appropriate per price the produce. So we can decide it the price of selling this cost. How we can decide the price of selling cost without know the cost itself? So the cost itself, when we know the cost of the product, we can know how much we will sell this product. So it serves a useful purpose to the management to decide the per unit selling price of the produce to charge from the purchase as per market demand and supplies, and keeping in view the feasibility of the sustainable. So this is very important to know the cost of the product, to know the price of selling. For analyzing the result from the different products. For analyzing the results from the different products, one can quickly determine the production results of every product, such as the cost incurred on the pronouncement of material, labor, overhead, etc., for each respective product or department wise. So we can know the different type of cost for material, for labor, for overhead, for department, for everything. So we can make analysis of production, analysis of production, how much we incur direct material or labor or overhead. To make analysis, maybe we have weaknesses in material cost, or we have weaknesses in labor cost or in overhead cost. So this analysis also help the management in decision making. So we can use the cost of the cost in analysis of the result of products. We can make analysis for direct material, for labor, for overhead, to know which is the weaknesses to support, to improve these weaknesses. To prepare budget, this is very important. To prepare budget. When we make the budget for next year, we can estimate, we can predict the cost of our material, of our labor, of our overhead cost. So every organization plans its fund utilization and prepare a budget for the production of each product, which need to analyze of past cost and future requirement, which can easily be seen from the maintenance cost records. So the cost can help management in prepare the budget for the future. We can know how much we need, how much we need money, if we can borrow from the bank, if we can increase our capital, or if we can blah blah blah, like this. So we this cost can help our management or our decision making to prepare the budget. Okay. The eighth objective is to comply with the legal requirements as laid upon by the government. This objective is legally objective. So when we know the cost of the object, the cost of the products, we must follow the requirement of legal or the regulation of our company. If the legal or the requirement of for regulation need some criteria of the production, we must follow this criteria. Various legal implications will also lead upon the enterprise to maintain and to prepare such records as required by the law on the item based and in such manner as prescribed under law. So for more enterprise, maintaining cost recording is also compulsory. We need to know the requirement of legal regulation. Legal regulation maybe must know or buy this material, or you cannot buy this material, you can use this labor, you cannot use this stuff. This is the requirement of legal regulation. Timely information to management as and where requires. Sometimes the budgeted plans are in variance with actual expenses incurred for producing the products. Thus, correctly maintained cost records help to management decided where cost cutting may be done or should be done. Time information to management. Okay, so during the year, when we know the cost of this line of product, maybe we have some line of product. We can use this product for laptop, this product for desktop, this product for cell phone, this product for any other line. So for every line of production, we can make timely information. In this line, we have losses. Okay, so we need to stop this line. This line, we have profit, so we can continue in this product. Okay, so time information is very important to the management to take right decision. Okay. 10.1 is helps management in decision making, as we take in the previous. Also, help management in taking decision about the cost reduction. Help management in taking decision about cost reduction. So it seems that there many be various of cost incurred from the budget prepared with the actual amount incurred. So we have budget and we have actual cost. So when we see any variance or any fluctuation or any variance, so in the actual cost, we can take the decision. We can take the decision to stop the losses. So it may sometimes also be because of the government policies and other factors. For instance, suppose we have a manufacturing plan in a remote area due to the weather problem or any unavailability of raw material to be used in production. So this is a timeline also. This is the plan of this production. We can take the decision from the management. How we can reduction the cost, how we can reduce the cost is depends on the known or to knowledge of our cost. Also helps cost auditor in easily analyze the data. Also, if we have any plan to audit the cost and to follow the flow chart of our cost, also we can use. As per the policies and regulations of the government, such companies fulfill the criteria required to maintain such records in a predicted manner and get them audited by the person authorized to do so in case of cost recorded cost auditor. When the cost record are to be audited, the properly maintained accounts and allocation will positively affected the auditor mind regarding to the compliance made by the enterprise and convenience such auditors to issue favorable report of accounting. So when we have classification and we have a good analysis of our cost, is by default the report of our auditor will be is favorable report. So the cost, or if we have good cost analysis, so we help cost auditor in analysis the data. Okay, help in finalizing of financial statements. Also, this is very important. When we know good classification in our cost, it at the time of preparation of financial statements, the properly maintained accounts help to financial analysis easily understand the cost and expenses that an enterprise incurred over some time and could also save time. When we have good classification of cost, this is easily for us as a financial to prepare the financial statement, to prepare the report of our company. So this is the good classification will help in finalizing of financial statement. Also, the last one is act as a base of formulating policies. Okay. The information of cost accounting is help in management in planning or in formulating policies for the future. By analyzing the properly maintained cost account, the management and the decision-making team can easily judge the proposed and cons of the decision considered and taken shortly regarding to the business activities and day-to-day operations. Furthermore, as appropriate accounting is done by analysis, one could easily formulate the policies laid upon or adhere to. So when we have good classification of cost, we can make the future policies. We can plan or we can create a good plan and a strong plan and a flexible plan when we have good classification and knowing of the production. Okay, this is final for our lecture today, is how to know the cost classification, cost types, cost objectives, how we can know the terms of cost, type of cost, and objective of cost. Finally, thank you for all audience and this participation in this lecture. Okay?
Thank you, Dr. Mandrel Daya. Now we move to the next session, that is Q&A session. If everyone want to ask, you can raise hand or write the question in the chat column. All right, Dr. Mandrel, I have a question.
Okay.
It's about prime cost and conversion cost.
Yeah.
Are prime cost and conversion cost related? Is it necessary to calculate the prime cost to calculate the conversion cost first? It will affect to the next calculation or completely unrelated?
No, this is maybe some of a classification of cost. So in the management, how much we have more classification, it helps the management to take the good decision. So when we know the prime cost, that means this is compulsory cost for this product, okay? But we cannot make it this product without incur the manufacturing or convention cost. So if we have prime cost, that means the material it is in the store, okay? But when we need to make its a production, that means we must incur more cost. That means convention cost. Convention cost, as I said before, this is the cost need to change the material to finished goods. This is two types of cost. The prime cost is incurred to just to make the material is a standby to convert to the finished goods. So just this is to classification, this type of a classification to help the management.
Oh, all right. Okay. Thank you for the explanation, sir.
Okay, welcome.
Is everyone want to ask? You can raise hand or write the question in the chat column. Yeah.
Maybe this is a new idea about the students. I think this student in which semester?
Semester 2.
Semester 2.
Yeah.
Oh, okay. So this is the first time here about the cost accounting, blah blah like this.
Yeah.
So maybe this is a new terminology.
Yeah.
For your information, I add some parts from outside the book you sent me. I add some parts. Maybe this is outside from the books. Inshallah, I hope this is useful for the students.
Yeah. It's very useful.
Inshallah. I hope that. I visit Indonesia, alhamdulillah, many times before. So I know the culture of Indonesia. Maybe I visit Indonesia more than 10 times before. So inshallah, when I visit Indonesia again, inshallah, I will visit Muhammadiyah Yogyakarta, inshallah. Okay.
Yeah, there's question from Kansa Adira. The
Okay.
question, yeah, the question in the chat column. Okay, the question is, what are some challenges that companies usually face when setting cost objectives?
Okay. This is cost objectives. We no need to setting the cost objectives, but this is by default. No. Why we must know the cost of the product? Why? The cost of the product, they have some objectives I explain. So when the company is know exactly or a classification the cost of the product, they can use or they can achieve these objectives. Good decision making, make good budget, and maybe finalize and can follow the regulation like this. So we cannot, or no need to set these objectives. Just this is to know how can we can useful for this cost accounting information. Why we need cost accounting information like this.
Okay, thank you
Okay.
for the explanation.
Next question.
Yeah, there's
Yeah, yeah.
question from Natasha. The question is, why should semi-variable cost be separated into fixed cost and variable?
Okay. Why we know this fixed semi-variable fixed cost and variable cost? So as I explained in the example, in some countries like maybe Indonesia, maybe Palestine, like telephone bill, we have constant amount of payment. If we use the telephone or not use the telephone, you must pay this amount. This is a fixed cost. But when we use the telephone is more than this limit, you must pay more than money. Like this. So we need to know how much the fixed cost. In our decision, we need to know or we need to take the decision, or we need to calculate the fixed cost. The fixed cost, we must calculate this telephone bill, not a whole, just part of our bill is fixed, but another part of our bill is variable. So we can step cost in our classification. This help us, I mean, the step cost is help us in our calculation in budget, in determine the fixed cost, on calculate the price of our product. Okay.
Okay, thank you for the great explanation. And I think it is the last question from Susila. The question is, besides having advantage, does cost accounting have weakness?
What? Is decided have advantages? Does cost accounting have weaknesses? Thank you. Okay. Any what human being work is maybe have weaknesses and advantages. Okay. In cost accounting, I think we have some maybe difficulties to know the specific classification of cost, like maybe like overhead cost. Sometimes this is admin cost or distribution cost or finance, or this is the more classification is have need more efforts and need more time and need more money like this. Maybe this just maybe some not weakness, this is difficulties or this is cost for the company, like this. But it's the cost accounting is very useful for the company to take the decision. Okay?
Okay, sir.
I hope,
Okay.
inshallah, maybe in the next lecture or next part of this course, I think they will be more clear for the students what mean about the cost and the benefit of the cost course, inshallah.
Yeah. Okay. Does anyone want to ask again? You can write the question in the chat column if you want to ask. Or it is better you can ask question to Dr. Mander by speak.
Yeah, this is better to practice the English language.
Okay, Mister. If there's no one to ask again, can we jump to the next agenda?
Okay.
Okay. Okay. Thank you for all who asked about this topic. Now we move to the next agenda that is, thanks to Dr. Mander Eldaya for the
Okay.
attractive material. Hopefully, it can help the audience to have a better understanding of cost accounting. Now, we are turning to the last agenda, which is closing. As the master of ceremony, I do apologize for any mistakes during this event. Finally, I say thank you. Before leaving this event, kindly please everyone turning on your camera because we want to take a picture. Please turning on your camera. Okay, ready?
Okay.
Okay. 1, 2, 3. Once more. 1, 2, 3. Once again. Okay. 1, 2, 3. Okay. Thank you for joining this event and see you on the next event. Wassalamualaikum warahmatullahi
Okay.
wabarakatuh.
Assalamu alaikum wa rahmatullahi wa barakatuh.
Thank you, Mr.
Dr. Mander.